Good evening, everybody, and welcome to another live stream by the Option School. So tomorrow there is a weekly expiry. We will analyze weekly expiry for Nifty today, and we will also see. We have been getting a lot of requests to recommend some books. So we'll see three option trading books, and these all three books are different. And if you have three books in your shelf, so I think that makes you quite a complete option trader. Let's see what are these three books and what kind of information these three books are having, right? Hopefully my voice is audible, and if you can confirm that my voice is audible, then we can go ahead and start today's video. And okay, so far I'm not getting any confirmation. Welcome to all of you. Okay, thanks, Mr. Vishwas. I think again today there is a little bit of delay in when I'm speaking, and by the time it's reaching, and I'm getting the confirmation from you. Anyway, that's something which is not in our control, right? So again, welcome to another live stream. Let us see how we are poised for tomorrow. So far this week. Right from Monday onwards, market has been slightly scary. They are not doesn't look like normal markets, but otherwise they are like if you see actual movement is not much, but because of maybe Dow Jones movement, maybe because of Nasdaq's movement. So sometimes we find that okay, these markets are not very stable markets. But if we purely see our own markets, things look pretty okay, right? So all of you who are new to the channel, please go ahead and click that subscribe button, and do not forget to press that bell icon also, so that you get notifications whenever we are live. And most of the working days we are live at 9 p.m. And all of you who are already part of this family, you know what to do. We need to click that like button, and we must take that like button to at least 200 likes before the video is finished, right? We have with us all our big time supporters, Deepak ji, Mr. JP, Mr. Kamal, Dr. Kadam, Dr. Rajan. So all the gang is there. So seeing all these names give me a lot of strength that okay, uh, all of you are there. Great. Not that okay, I know all of you now. Mayank, Mr. Shashikaran, Mr. Srinivas, Mr. Sanjeev. Not that okay, so on my screen I'm seeing only these many names, so that's why I'm taking these many names. But all of you are most welcome to all our live streams. And thanks for clicking some of the like buttons. So Mr. Ingrid Moti, Mr. Mahendra Chaudhary, all very known names. You see, all these names are to me as if they are my family name, right? And that's really great. Okay, now let's straightway go to what is happening in Nifty, and what kind of trades we can do tomorrow. Okay, this is Nifty roughly around in between somewhere 250, 11,250 to 11,300. Roughly around, maybe I think if I'm not wrong, 11,278 or something. So if we analyze the way we have always been analyzing, first thing is let me check what is the straddle premium. Since market is not at a single level, let me check 11,300 as well as 11,250. So 11,300, if I see call is 44 rupees, and 11,300 put is also, let's say 42 rupees. So 44 plus 42, roughly around 86 rupees, which is fairly good. So if I say 11,300 plus 86 plus 90 is 11,400 roughly. And if I subtract the straddle premium from 11,300, it goes to somewhere around 11,200. So 100 points plus and minus, which is fairly good. Even if I see, because market is not exactly at any of the strikes, so even if I see 11,250 on 250, if I see okay, this 76 may not be a whole premium, and this is again 23. So roughly around not more than 100 rupees. So from current levels, as per this data, right? This data, what we have seen in last 9-10 expiries, it has been working pretty good. And whatever is the range we get through this data, most of the times what we see market just swings within that range and expires somewhere within that range only. And so let's see. 11,300 gives me a data of roughly around 11,400. Where is highest open interest? If I see on call side, now this is really dicey. 11,400 is the range which is coming by analyzing 11,250 and 11,300 straddle, and that is also, you see, extended kind of a range. If I see 11,250, 100 rupees add to it, it gives me 11,350. But at 11,350, if you see, it's only 15 lakh 24,000 is on the open interest, and if I see the absolute highest open interest is at 11,500, if you see this, whereas the straddle premium range is talking about something, the range up to 11,350, 11,400. Let us see on the downside what's happening. From 11,300, if I subtract 100, it gives me 11,200, and if I see the highest open interest, oh my god, highest open interest here also is 11,000. Right? Generally, in our previous discussions, whenever we are seeing this analysis, we are almost getting, you see, plus minus 50 point kind of a range. So highest open interest will also give us the similar range, and straddle premium analysis will also give us the similar range. But today what we are seeing is, if I analyze by straddle premium, the range seems to be somewhere between 11,200 to 11,370, 380. But highest open interest is still at 11,000 and 11,500. Now, this, you can say, in a way shows, because again this open interest or the positions at different strike prices will not decide where the market will go. I always say options do not decide where the market will go. It is the actual cash buying or selling which will decide where the market can go. But all, what is this then? All these are option positions, and based on these numbers we can in a way analyze that, okay, what majority of option sellers are thinking. Now, today, after almost 8 to 9 expiries, what we are finding is, even the option sellers are slightly confused if you see the data as of now. So we need to see it tomorrow morning, maybe at around 9:30 or 10 o'clock, after the initial whatever initial swing in the market is gone. So then we can see whether things are settling down or not. So what do I mean by things settling down? Now, things settling down means wherever is the market, whatever is the straddle premium. If the let us say if the market is at 11,300 and straddle premium is 100 rupees, let's say it will not be 100. The way we are seeing it is already 86. So let us say the straddle premium is 75 rupees. So market's range becomes somewhere around 11,375 and 11,225. 75 add to 300 and 75 subtract from 300. So that should be the range, and our highest open interest also should be somewhere between 11,200 and 11,400. Right? The problem is, when highest open interest is very, very far away from straddle premium range, it gives us an indication that, okay, maybe there is a fear, maybe there is a indecisiveness in the market. That is why most of the option sellers are sitting on the uh, outer range of the market. They are sitting at the highest open interest is, if you see, almost 225 points from uh, call side and almost 275 points from put side. On last day, today is Wednesday, Thursday is expiry. If even on last day, people are sitting on around 250 points away from the spot for highest open interest, that shows that, okay, there is indecisiveness. Even most of the majority of the option traders are not very clear that, okay, where is this market heading, right? So in this kind of a situation, it's very difficult to decide whether we should be doing what kind of a strategy. So I will say, seeing all this data, today I will say I'll give it a pass. I will not decide that, okay, I will do something like this. I have been showing you some strategies, but I will say let us not do that right now. Maybe similar analysis you need to do tomorrow morning, not before 10 o'clock. Let things settle down by first 30 to 45 minutes, and then you see, okay, where is the straddle premium and how do the open interest stand. If the range is matching, then we can say, okay, we can take the kind of trades we have been talking about, baby butterflies and stuff like that, or maybe even a naked short triangle uh, with a sort of an eagle's eye on the trade, that okay, as soon as something happens, I need to adjust my trades, right? Mr. Krishna is saying US markets up 1.8%. So this US market thing has also become a sort of a drama. I think yesterday when we were talking, it was down by almost more than 400 points. Nasdaq was really, really down, and many of us were getting those kind of feelings that okay, what will happen? What will happen? Today also we opened pretty much gap down, but ultimately see what happened. Our markets ended up with hardly 30 to 40 points, if I'm not wrong, 30 to 40 points kind of a fall, which is very, very normal. Although uh, on I think fall, market went down. If you see the bottom of the market might have gone down by, if I'm not wrong, I've seen that at around 125 points down from yesterday's closing. But ultimately, there was hardly anything, right? So that way, I was telling this thing yesterday also. I was telling this thing on Friday also, when we were worried that okay, there is a sharp sell off in US markets, that okay, we cannot do anything about that. And if you remember a few years back, this used to be the phenomenon with Chinese markets. We used to follow the Chinese markets like anything, and whatever is happening in that markets, next day similar kind of impact we will see in our markets also. But slowly, what happened? Their volatility was, you see, unnecessary. Unnecessarily markets were going up and down, and for few months we followed, and then after that there was a complete disassociation from those markets. So whatever is happening to those markets, our markets started ignoring that, and even if that market is down by, let us say, 2-3%, our markets will not react like that, right? Similarly, I think now this is the right time for our markets, and in a way it has already happened, I think. So if Dow Jones is behaving like a what should I say, a Z class stock going up and down like anything. So I think our markets will slowly start disassociating with these kind of moves of the market, which are unnecessarily causing baseless, reasonless volatility in the market. But still, we need to see that okay, U.S. markets are U.S. markets. It's a big financial hub for global markets, so it's not easy to disassociate ourselves from that markets. But even if we see, I was reading an article. Most of the Nasdaq companies are technology companies, and most of the Dow Jones is dominated by oil companies. So if Dow Jones go down, barring you see few associations that okay, FIs may withdraw money from Indian markets, etc., etc. But otherwise, if oil company stocks are going down, maybe oil prices are going down, that is fundamentally not very bad for us, right? So, and if Nasdaq is going down, it's more a technology based index rather than a diversified index. So maybe our presence in technology based shares in our index may not be that great, right? So 11,500 premium is hardly 2.8. Why do option seller? Why not? You see, option sellers will like to extract even last single penny in the market. The 2.8 rupees in just one day is not bad, right? Both US European markets are up in green. That's great. Welcome, Dr. Murthy. Seeing you after so many times. Yeah, Reliance is so. It was Reliance who has contributed 50 points to Nifty. Yes. So what is happening is Reliance is almost single-handedly holding up the whole index. So hopefully the guy is doing really good and taking care of most of the investors, and most of the Robinhood new investors, right? Highest OAF for few strikes are because people are buying at these strikes to reduce margin. Um, Possible, but why should anybody buy at the last day? So if you're into, let us say, 24 September or 17 September, you may not keep these positions. So highest open interest generally is seen with the perspective of option sellers, not the perspective of option buyers. SGX is up 39 points, not bad. Low premium for 9, so go for 17 strangle. Okay, this is 10th, right? So obviously all the trades are already gone. Asian markets are all closed. You see, they are whatever happened in the daytime based on that, they are all closed. Maybe some trap. I don't know, but I am not comfortable when two different parameters are not matching. Straddle premium is giving a different range. Highest open interest is giving a different range. So till the time you see we have the confirmation from both the sides, it's better to not to trade at least this expiry. I do not have option chain of next expiry, so we will see. But again, the same analysis can be carried out similar way at around 10 o'clock in the morning. And if things are matching, then obviously you can take up those trades. What Mr. Shreyas is saying, today FI sold 1,000 crores, 700 in future, DI sold 260, yet market went up. So I think yesterday also we had similar discussion. Forget about FIs, DIs. We do not know what exactly they are doing. So even if they have sold and still market has not gone down by 200, 300 points, market has gone down only by 39 points. So you do not know whether they are selling something they have already purchased, whether they are doing a fresh shorting or whatever they are doing. So I have started. I've long back. I've started ignoring FISDI's signals and ignoring Dow Jones signals. And many times I've seen they do not make any sense. Sometimes you see, even if you say they make sense, even if you say they do not make sense, chances are both the things will be 50% true, right? Will make sense, but otherwise I don't think it makes any sense to analyze their data because their data can be having so many vast parameters, right? So ignore that, and based on your own strategy, based on your own strength, based on your own adjustments, let us trade. And better thing to do right now is like the video. We are lacking in likes. I have not said made any appeal, but still that doesn't mean we don't need likes. Your likes are very precious to us. So go ahead and click on the like button, and then we will see 3 option trading books which can be really useful in your actual trades also. So I'm taking a 5 seconds water break, and this is a good opportunity to click on that like button. Okay, at least a little bit increase, but still almost 100 people are saying we are like option traders. We are not decided what to do. Number of likes on video, number of points, gap up tomorrow. Okay, Chase, you may not get my uh, likes removed because many of you may not be liking the market to go up. Now we have equal number of shorts as well as longs in the market. What Mayank is saying, I have observed the call sellers sleep more peacefully. It's not the case, Mayank. Let me tell you very frankly, whenever I have lost money in the market, I have lost money in the market in rising markets. You will be really surprised to know that I have, whenever I have lost money in the markets, I have always lost money in rising markets, and that too. Uh, uh, you see, two instances I really remember. One I have already discussed with you way back in 2013. Market went to 5100, and immediately after that started going up, and I got stuck up in calls, and I carried those calls for almost 6 months. Ultimately, they were in profit. That was also a rising market where I lost. Like I had to roll up my positions for almost 6 months. And another time when we got into some kind of a trouble and we have to wait almost till October, and that was this popularly known as Sitaramani candle when market went up by 1,000 points within 1 or 2 days, right? So that was also rising market almost from if I'm not wrong, I think from 10,500 it went to 11,500 within 2 days. That was also a rising market, and nothing happened to us in this Corona scare when market from 12,400 went to 75. So I have seen, and once I remember when Mr. Raghuram Rajan was governor, and 8:30 in the morning he decreased interest rates by 50 paisa. There was not a RBI meet, nothing was there. Suddenly in January he reduced, maybe there was a pressure from government or whatever. He reduced interest rates by 50 paisa, and that announcement was made 8:30 a.m. in the market, and markets went up by 1,000 points again in 2 3 days. So that was really difficult to handle. Although once you are into trades, you have to handle. So maybe you have to postpone your profits. You have to be in the markets for similar kind of a profit. For if that profit was to come in 10 days, maybe you have to wait for 40 days to get that profit back on track. So uh, call sellers sleep more peacefully? I do not think, man. Uh, uh, Personally, I have experienced that. Okay, put sellers are more uh, are sleeping more peacefully. I don't know, right? For likes, also patient required. It seems. Yes, I am very patiently waiting for your likes, Mr. Kamo. After back testing, it is realized that video and audio quality improves after pressing like button. That's the real thing, Mr. Ashok. That's really good. So all of you should click on that and see whether the video and audio quality improves or not. Right? Okay, let us see. Since many of you have requested for some books, we have given you some messages also. But I said, okay, this is a good forum wherein we can discuss some of the books. And first one, which I always recommend, even you have attended our workshops or whatever, webinars or any discussions, Bible of Options Trading Strategies by Guy Cohen, one of the best books, right? This book is not a very thick book, roughly around, if I'm not wrong, 400 to 450 pages. Good thing about this book is it has roughly around 8 chapters, and it covers almost all the strategies in different ways. So chapters are divided into some different sections. So chapters are divided into some different sections. And now this is sort of a reference book. If I want to just, okay, I've done these trades. I've done, let us say, a set of multiple butterflies, and this is happening to my. This is the health of the trade, and I want to see something really basic. So you can go to this book and check that. Okay, what is the basic sense? What should be the basic context when you are creating such a trade? So all the strategies, whether it's short strangle, long strangle, iron condor, butterfly, calendar spread, everything is given, and everything is given in detail. And the good point of this book is it has given you what will happen to different Greeks as time passes in different strategies, right? So this book really is a basic kind of a reference book. I remember when I read this book for the first time, I couldn't make any head and tail out of it. Basically it was my lack of, you can say, knowledge. But once you are like all of you are pretty good expert traders, and you are looking for good information on all the strategies. So this is one book in which you will find very contextual information that, okay, what are the scenarios in which we are doing this kind of a strategy, and it covers all the strategies. And only one part which is, although in every strategy it's saying, okay, if the strategy doesn't work, what you should do, sort of an adjustment. But in most of the cases the adjustment is that, okay, you just cure off the trade, right? But barring that, it doesn't talk about many good adjustments, or rather it doesn't talk about any adjustment. So if had the author given some adjustments also, it could have become maybe Bible scare or something like that. But as far as understanding option strategies as well as choosing option strategies, what should be the strategies, this is one of the best books. Is the voice okay now, or is still breaking? Oh, I just seen Mr. Kamal Bansal's message. Is the voice okay, or there is still some issue with the voice? Can you please confirm if the voice is okay? Okay. Okay, thank God. Yeah. In the middle of the video, I would not like to do some changes, right? So this is one basic book, and you will enjoy this book only if you know certain options. If you are a newcomer, you will hate this book like anything. I hated it. I hated it. I hated it. this book like anything. A good book, if you are aware about analysis. Second book is by I don't know how to pronounce this name, Dan Passarelli, Trading Option. Now this author has multiple books, but one of his best books is Trading Option Greeks. Now this book cover Greeks in detail, and once you're through this book, I think this book is again roughly around maybe around 350 pages, and divided into basically four parts. First part is on Greeks only. First part, and you will be surprised to know, first part on Greeks has 8 chapters. Very, very thorough work done on Greeks by this author, an excellent book as far as Greeks are concerned. Not only Greeks. Now it has part one, which has 8 chapters on Greeks, then part two, 3 chapters, and it covers almost all the spreads. Vertical spreads, these spreads, that spreads, everything it covers. And then third part is on volatility, and then it covers uh, delta neutral trading. So how to neutralize your delta. So treatment of all the strategies is through Greeks. So first book, it was a reference kind of a book which introduces you to most of the strategy kind of trading. This book tells you lot of inputs on Greeks, right? So this Greeks treatment is excellent. As you see, the overall I think book has if I'm not wrong, around 17 chapters. Out of those, 8 chapters are devoted 100% to Greeks, and then fourth part is again 3 parts, which is advanced option trading strategies, right? Which covers in terms of advanced option trading strategies, it covers maybe short strangle, short straddle. And good thing about is in the fourth part of this book, it talks about some kind of adjustments, right? Those adjustments are worth learning, although it may not be talking about the kind of adjustments we have been talking, because again, these are all US authors, and they're very, very conservative in their approach when it comes to adjustments. But definitely a very, very, very good read. And I find it much more interesting than Guy Cohen, but Guy Cohen has a totally different utility. This book, anytime if you have any doubts on Greeks, this is an excellent, excellent read, right? So this is second book which you can think of. If you want to buy, you can buy. If you want to, you see, search net, you might get a PDF copy also. And we have given the link in the description. You can see and you can match whatever copy you are getting, whether you're getting it you see, soft copy has its own disadvantages, and hard copy, if you have a hard copy, that means okay, you will go through the book. But then the different problem with these two books is the hard copies may be pretty costly. But it all depends. If you're really serious about these things, uh, it's not that costly also. It's worth every penny spent, right? 4409 Amazon Kindle. Oh my God, that's pretty costly, right? Third book, which I don't, which I'm 100% sure is not costly, and which is a brilliant fast read. This is not more than 120 pages, and even if you don't know anything about options, this is an excellent book on iron condors. Mark D. Wallinger, right? This author covers right from everything in basic, right from basics to everything, right? So again, this book is covered into 3 parts. First part talks about basics, and it talks about okay, what is call, what is put, etc., etc. And one of the good chapters in basics is uh, um, winning iron condor mindset. So it talks about traders psychology also. So a good read. And second chapter talks, second part actually, which has many chapters. Overall I think it has 19 to 20 chapters. Second part, which is the lengthiest part, it talks about nuts and bolts of iron condor. So many times I also feel that okay, even our webinars, somebody who is totally new to options, it becomes very difficult to bring that person at par with the kind of stuff we are talking. So if somebody has gone book like this, and this should be a uh, 100 200 rupees book, I think 100 120 30 pages, and very fast read. You can finish the book maybe within 3 to 4 hours. And interestingly written, not very mathematically written, interestingly written, like a normal book. And third part very well gives some adjustment techniques by the name of risk management. So good risk management is covered in the third portion of this book. So all these three books, first one is purely on strategies. It gives you a wide exposure on strategies. Second book makes you expert on Greeks and how to use Greeks in your strategies. That is second book. And this third book, which is an easiest read, and it's a masterpiece on iron condor. That okay, A to Z of iron condor is given in this book, and definitely it creates a lot of interest in iron condor. So once you see that okay, you have gone through a book which talks about so professionally about one single strategy, your interest level in different strategies grows like anything. You see, ultimately, we all of us grow. When I first read Guy Cohen, it was a nonsense book for me because I couldn't make any head and tail out of it because I was totally blank in options. I said, what this guy is talking? Every next strategy is saying buy option, buy call, buy put, sell put. What is this? Every strategy is same. Because it was my problem. I didn't knew anything about options. But now you find what is the utility. Similarly, if you read one good book of more than 100 pages, I'm really surprised how somebody can write uh, such a big piece on single stretch. But they have done that. And if you read 100 pages on iron condor, it really gets absorbed in our blood, right? Then decisions become pretty fast, understanding becomes very fast. So this is a good journey if you want to read just one strategy, and then your treatment towards other strategies and their adjustments and their entries and their exits and their other parameters becomes much more deep, not only for iron condor, for other things also. You start appreciating okay, what do you mean by this adjustment? And when in our workshop we talk about certain adjustments, people say, oh, some of you say that okay, these adjustments look very simple, but actually when you go in depth, you come to know what is the benefit of risk management, what is the benefit of making the trades left, right, and center, and when to make trades, when to exit trades, when to book profits. So we develop that kind of a mindset that okay, how to treat a particular strategy, right? Hopefully my voice is audible. I really do not know because all of you are not clicking many more likes, although we have capacity to get another 44 likes. But hopefully my voice is audible. And somebody who is quick to read soft copies or Kindle kind of editions, I think most of these books might be available in PDF format also. But I prefer reading hard copies because you can sit whichever way, and you can read whatever time, whether you are in train or plane or on bed or 2 o'clock at night. Anytime you can read, that makes more sense. But still, that doesn't mean that okay, we keep on spending that kind of money. So if you have uh, you are pretty much comfortable in reading these books on online mode, that is also pretty good, right? Can you advise a book on risk reward strategies? I also need to search, Mr. Vivek Chandra. I have not less than 70 books on options and stock markets, although some of the stock markets are fundamental and technical analysis and candlestick patterns, which I don't like at all. But I don't think anybody must have written a book on risk reward only. But if you go through Guy Cohen very clearly, for each and every strategy, it talks about what is the risk and what is the kind of reward in percentage also, and taking care of all the Greeks also, right? What Mr. Sandeep is saying, Pradeep, you should write a book. Your knowledge is way beyond all these authors. Adjustment could be a great topic to write. I think you're planning. Yes, I started a book which is still maybe not even 30% complete, and I don't know when it will get completed. So I'm really really very keen on doing that. Maybe I'm looking for some help. And there are so many things in Indian context. You see, all these books are written by US authors mostly. So in Indian context, I'm yet to find a good book on option strategies and adjustments. And definitely we can fill that gap. But when will that happen? Only God knows, right? So man proposes and God disposes. It's something like that. But definitely, if you people give me more likes, I should think of writing a book. Can you make a members only video on inverted triangle adjustment? I don't think so, because inverted triangle, I have made two videos, and in all the forums I am saying when to use. It is not an independent strategy. It's a part of adjustment. Don't start doing inverted triangles right from the beginning. So it's the in the end of the trade, when you try to rescue the trade, ultimately you should not be into inverted strangle at all, right? Option strategy, risk and return ratios by Brian Johnson. I need to see whether I have that. Maybe this is Mr. JP is recommending Mr. Chandra some book on risk and reward, right? Those who like video daily will get this book complimentary. Yes, but you see, Dr. Rajan, somebody asked me that, okay, if I read all these books, do I need to join your webinars? I said, if you go to library and and read a book on surgery, that doesn't mean you will become an expert orthopedic surgeon like Dr. Rajan. It's after you have gone to medical college, you have done practice, then these books will start making sense, right? It's not other way around that you read book and you become expert. When you have already gone through something, a struggle, you have become a doctor, then these books make sense, right, Dr. Rajan? So similarly, if you have understood strategies well, and then you want to strengthen your knowledge, then these books will be really really great, and you will like reading these books. Okay. Uh, okay, our iron condor and butterfly, 19th and 20th September, 2 hours both the days, and calendar spread is 4 hours on 27th of September. And anybody who willing to join can contact us. I will be sharing the numbers. And our October workshop will be on 3rd and 4th October. Meanwhile, in September, we do not have any full workshop schedule because of certain constraints. So anybody willing to join can again visit us at our website. There was a problem on the website, I think, which is from today morning. It's already rectified. But most of the knowledge we are giving it on this videos also, right? So anybody willing to join, you can contact us on these numbers. And I today wanted to put that Opstra thing also, because many, again, we are getting messages that, okay, I want to buy that Opstra. I do not have the link. So link is given in the description, guys, and we are not writing the uh, coupon code in the description, because it's again it can be searched by Google also. So even Opstra people do not want that. So you go through that link and you write TOS 10, TOS 10. If you write TOS 10, you will get 10% discount if you're buying any paid Opstra. If you're not buying paid Opstra, it works free also for at least, I think you can save 2 strategies, right? On a serious note, yes, Mrs. Sandeep, I am pretty much serious on that. 30% work is already done. When will that 70% job get completed? We really need to see. So, on personal front also, you see, you have a life cycle. So, I am at certain life cycle where my kids are at that age where their settlement into proper colleges is more important. So, maybe you're not able to give that kind of a time. So, maybe within next 6-7 months, things will be much more settled, and then I will be able to spend more time on that, right? So you can send a WhatsApp, or you can contact us. You can send us info@theoptionschool. You can send a mail also to us for any information you want to have on our webinars. Thanks for clicking like buttons, although we would have loved to have another 30-40 likes, but uh, uh, whatever likes have been done, really, really so nice of you. Grateful to you for all the likes. Share this video to somebody to whom you think it will be useful. Now, anybody, if he's asking you that, okay, can you tell me some books, you can straight away share this video to them. At least for options, if you buy these 3 books, one book tells about all the strategies, second book tells about all the Greeks and uses in the strategies, third book tells you about huge depth in one strategy. So it kind of completes the trader's knowledge. Write your comments, suggestions, feedback, questions, anything you feel like in the comment section. Your comments are always precious for us, and we are waiting for your comments. So would like to love to know some other books. Like one book already is recommended by Mr. JP, who is our official brand ambassador of Combo 2 now, right? because he is doing much better than what we are able to do. So maybe we have to arrange a seminar so that he can tell all our Combo 2 participants how to take Combo 2. Today I was shown a Twitter wherein I think Mr. JP, you have done uh, Combo 2 twice, and in both the cases you are able to pick up more than 100 rupees as a profit. I am really uh, impressed and really appreciate that, sir. Right? So keep on writing. If you think that okay, there are some better books, write it in the comment section. Maybe we will share with others also. And if you have not subscribed to this channel, you are definitely missing a very useful conversation on options trading. So go ahead and subscribe to this channel. Thanks to all of you for joining. Keep your trades as safe as possible tomorrow, because markets look a little bit scary. Whether they will give that big move or not, that's something we need to see. And let's see. Have a great day. Though Sheldon Nettenberg book is very good, but then if you are too much into trading volatilities and numbers and volatility skew, then that book is a very mathematical kind of a treatment for everything. But yes, another excellent book, Mr. Magadhi. Good one, right? Have a great day. Good night. See you all tomorrow again, same time, 9 p.m. Thank you.